Hey there, I just want to give you a quick video update of what's going on in the world, the economy, the markets right here. It looks like maybe the worst is behind us. I know this October has a terrible reputation for crashes, and I've been saying in my newsletters that I want October to be behind us, and I stand by that. I don't think I want to take any more aggressive positions, nor would I recommend it. The Fed is meeting again at the end of October, and they finish the 28th. And so they could decide to raise rates, which I think would hurt this market, although I don't think they will, which leads me to be more cautious. I would rather sit on the sidelines a little bit. Hey, it's another 2 weeks. What are you going to miss? 0.5%, 1%, 2% on the upside in exchange for lessening a lot of risk on the downside, which could happen if the Fed raised rates or if we did have one of our unlucky Octobers, which we have had so many in the past. So we just want to be cautious here. On the plus side, it's very possible that the lows are in. When the jobs number came out 3 weeks ago, it was so bad that everyone said the Fed will not raise rates, which is what I believe what I've been saying all along. I don't think rates are going up until at least next year anyway. You raise interest rates in the face of inflation, and we have absolutely no inflation. Exactly what I write about in my books. We actually have deflation without Fed stimulus. After the last jobs report, there was even talk about a QE4, which I think is way premature, but interesting. As soon as you have one bad report, people go from raising rates to lowering rates again. So I think that may have put the lows in. If people believe that the Fed is not going to raise interest rates anytime soon, I think the earliest will be March. Then the market could have put its lows in October. That 13, 14% correction we saw in the S&P was a lot bigger in many of the other indexes. Emerging markets were down 25, 30%. The small caps were down. So remember, nobody has a portfolio of just the S&P. It's well-rounded, and the last few months have been ugly for everything. With all hopes, if after their meeting they don't raise interest rates, then we could see a good fourth quarter, which is what I believe will happen. We're in the middle of earnings season. 74% of companies have reported better than expected. I think if that trend continues and we get some of the big tech companies like Apple, Google, and such come out with stronger earnings, I think this market will go higher in the fourth quarter. Do not throw caution to the wind, though. We've got to be very careful. We are due for a recession. It's been 7 years, and I'm not talking about end of the world recession. Just sort of a slowdown. We are certainly overdue for a bear market or a little bit more than a 10% correction. So always sort of have one hand on the sell signal ready for that. Invest for need, not for greed, which is what we do every single day. Try to find the best way to get the best returns, but with the least risk possible. That's about the most important thing you can do. So I do want to get through October before I take a little bit more aggressive stance. I'd rather have a little bit higher proportion of cash right here, be somewhat invested, be cautious and cautiously optimistic, so to speak. So the economy does look like it's slowing down a little bit, probably just enough for the Fed not to raise rates, but not enough to put us into a full-fledged recession, at least I hope not. So we'll have to wait and see how that comes. As always, listen to the radio show for updates. Make sure you're reading the newsletters and watching these videos. And always put a plan in place. What we do for our clients every day, make sure you have a plan in place, you have asset protection in place, and be prepared so you can make money in any market. If you have any questions at all, feel free to give me a call. Always good to chat with you. Thank you.